Hello, girls and boys. Hope everyone is doing well. Here comes a new video. I think this is the most important video that I have posted so far. And today we're going to talk about journaling and risk management. And I want to share my stories. Like, I have started studying ICT for almost 2 years now on the side of my job. And I have discovered like the trading concepts that suit my style because ICT has a very big library of concepts. So you have to find like the ones that resonate with you. And then when you do that, you start doing a lot of back testing. So seeing those theoretical concepts that you see in his videos happening in the charts every day. Because everything is algorithmic as ICT trades, so these things tend to repeat. And after you've been practicing this for a while, then you decide for yourself that this is time to start real trading. And for me, like that happened around September last year. And I'm at a point right now where I have seen, like, I have started discovering and finding myself. I am at the point where I'm reaching for probability and then I'm losing it back and I'm somewhere around break-even trader, finding its way to becoming consistently profitable. And one of the things that I have reflected a lot was what is holding me back is my lack of experience in terms of like understanding myself, understanding. So there are days when I do very good and follow my plan, and then there can be some days that trigger specific emotions in me, and that can make me like overtrade or risk more than I should. And then I go back to like where I started. So I work hard for like a month, and then I lose what I made in 1 or 2 days. And like ICT says, this is normal in your development, but you should make it in a way that it will affect you as little as possible, both financially as well as psychologically, which is even more important. This is called the mental capital. So reflecting about this, I decided to take my risk management more serious, and I realized that if I work too hard and with too much emotions, it makes it harder. This journey of consistent profitability becomes harder. So the better thing is to have a plan and to follow it as much as possible and be serious about risk management. So this is why I want to talk about risk management today. And then I'm going to go a bit into how to journal. And I will show you the templates that I use and how I do it. And if you want to make a copy of these templates to help your own journey, I will post a Google Drive link, and you can do that after the video. So here I'm starting with different tabs, so you can see 2K game plan, 1%, 2K game plan, 2%, and the same for 10K game plan. So this refers to like whatever savings you have decided that you want to test live trading now. You will start with that amount, and then you make a risk management plan and some goals. You set yourself some goals for the week and for the year. So, for example, let's say you start with an account balance of 2,000. This is what I personally started with, and I find it's a good balance to start. So the value of, if you trade Nasdaq, the mini contract is $20 per handle, which is quite much for a new trader, at least for me. But you could also trade the micro contract. This is like the minimum you can trade, and that has $2 per handle. I will show in a minute how you can see that when you trade. But for now, let's say so. If you decide to risk per trade 1%, which is kind of small, but it's a good place to start. So that would be, considering that it's $2 per point, that would be 10 handles you can risk. Or if you decide to risk 0.5%, that will be $10 out of the 2,000, and that will be 5 handles that you can risk. So this is how I calculate it. So the starting balance is 2,000. Then we calculate 1% of 2,000, so that gives us 20, and 0.5, which gives us 10. And if we make only 1% per week, that would be $2,020 that we will have the next week. And then we continue so on and on and on. And we look like if we reach to the week 52 and we just make 1% every week, which is quite easy, then we will have around 3,322. So that will be 50% or more than the initial balance. And then here I calculated how many losses can your account withstand if you risk yeah, I should have wrote this. If you risk 0.5. Can make this again. If you risk 1% per trade. So that would be like 2,000 starting balance multiplied by 1,000. So you can withstand 100. And if you risk 0.5% per trade, then you would be able to withstand 200 losses. So meaning you can risk you can lose 100 times and it will not blow your account. And usually like beginners traders, they risk too much. And when they risk too much, for example, if you lose maybe 20% in a trade, that will really mess up with your psychological state. And then you tend to like overtrade and over leverage. And these are things that you do in the beginning till you discover yourself. So I'll talk a bit more about that in the video. But for now, so like if we risk 1% per trade or 0.5% per trade, then we have this initial balance and we will make 1% per week, and every week it will increase. On the 52 week, 1% will mean $33 we can risk, and we will make almost 50% of our account. Let's say now we become a bit better in trading, and we decide that we can start like making 2% per week according to our history. So 2% per week, we would risk the same 1% per trade or 0.5% per trade. And 2% per week, it will mean $40. So if we manage to make 2% per week by risking 1% per trade or 0.5% per trade, then at the end of the year, we will have doubled our account and more. So that's like 100% return on investment. And let's say then we have an account that is a bit bigger, and we decided to invest $10,000. We have saved from our work, or we have the savings put aside, and we can put 10,000 in the account. And what would that mean? So now we can even risk less because our stop loss can be a bit bigger. So if we risk 0.5% per trade out of $10,000, that will be $50 of margin that we can have. And then if we risk 0.25% per trade, that would be $25 that we would risk. And our goal is again 1% per week. So 1% out of $10,000 will be $100. And how many losses can our account take? So if we risk 0.5% per trade, we can take 200 losses. So it will take you being wrong 200 times to lose this money. And if we risk $25 per trade, which is 0.25%, we can be wrong 400 times. And I don't know if I mentioned this, but the reason why I have two types of risk percentages is because I have a rule that if I lose once in a day, this is a rule that I'm working to implement more and more on me, then I can enter the next trade with half of the position, so half of the risk that I had. So if I risk $50 on the first trade, then I'm going to wait. So I'm not going to take a trade immediately. That's a wrong thing that usually shows that you tend to over leverage, go on tilt, and make bad decisions. So I will wait for the next macro. And then I will take half of the position, half of the risk, so that'll be $25. And then I will afford myself to lose 400 times. And if I made the initial money that I have lost, then I can go back to my initial risk of 0.5% per trade. And then if we follow that, then we see like at the end of the year, we would make almost 16,000. So it's a almost 60% return. And from our initial $100 per week, we will be making around $160. Same. If we do 2% a week, let's say we become better traders, so we can find more setups, and that will evaluate in us making, so here I'm losing like 4 weeks, but it will also double our account. So we see we make around 25,000. Similarly to how if this account of 2,000 will become 5,000. So already you start understanding that trading is more about being consistent and making consistent returns. And if you manage to keep this consistency, then the money will add up by itself, while your risk would be the same. So your risk doesn't have to increase, it's just your capital that it will increase. So now I'm going to show how I do my journaling. So once you have found your system, then you can do your journaling. And here what I usually do, so this is just a sample. So I have these different columns. So first is like date and time. This usually refers to the macro. So this can be London setup, New York open, New York AM silver bullet, lunch, New York PM, and the last hour of trading. I just have these emojis. You can make your own sort of interpretation after you study. My preferred time to trade is usually the PM session. So I look for something happening after 1:30, preferably starting from the 150 to 10 macro, 1050 to 250 to 210 macro. This is New York time. Then it can be the 3:30 macro, that usually is a reversal, or in the last 10 minutes. So the set macro 1550 to 4. So here what I usually do is like I write some things about the trade. So I have entered this trade at 3:30 p.m. and this is the setup that I saw. I saw it hit like a 1 hour fair value gap constant encroachment and 1 hour bullish breaker mean threshold. This is the trade setup that I have shared on the YouTube channel for Wednesday. And on the lower time frame, I saw a market structure shifts 22 model. And this was my entry, 182, and the stop loss was at 153. So it's around 30 handles, 29 handles stop loss. So 29, let's say 30 handles, round figure for a micro, that would be like 30 handles multiplied by 2 would be like $60. So that would be a trade that I can't really afford if I'm trading a 2K, because my risk per trade can be $20. But if I risk a 10K account, then it could be somewhere around the 0.5%. So that would be a good trade. And if this would be 1%, then I would be affording to lose $100. So yeah, in the beginning, you might have to give up on some trades because it doesn't match your risk parameter. So this is why it's better to have a bigger size account to save up and make more money, because the minimum you can do is a micro, which is $2 per point. Or you can just pass that trade and look for a better trade that has a better risk, that is more suitable for your account size. So yeah, so here was, then I share my target, where I thought price will go. Here I can also add the actual price value, how long it took, and how much heat incurred. This means like how much it went against me. So, and this is like, I'm going to show it how it looked into my journal. So this was the trade. So I will show it on the chart. So this was the market structure shift 22 model. It breaks this swing high, and then we make this fair value gap. And my entry would be around here, the fair value gap beginning, or it can also be at the consequent encroachment, which will decrease my risk size. So maybe it would be more suitable for a 0.5% risk. And my stop loss will be below the candle that formed the fair value gap. And how much it went against me, then it will be from the beginning of my entry point till the low here. So that would be around 10 handles in a micro, and that would be $2 multiplied by 10 handle, $20 it went against me. And my goal was this swing high, so this was 22 handles from my entry point, so that would be around $44 in profit. And then I also write how long it took for the trade to pan out. So in this case, if I enter here and each candle is 1 minute, so it'll be like 1 minute, 2 minutes, 3 minutes, 4 minutes, 5 minutes, 6 minutes. In 6 minutes, the trade pan out. So I can show you how that looks also. So this was the trade. I'm going to go back through it. First, I show it on the mini, because the trade is actually the same. So mini and micro is just the difference in how much it costs per point. So you can do your analysis on the Nasdaq 100 and then trade the micro. So here was the trade setup. So we had this 1 hour fair value gap. We can see it here from Wednesday at 2 p.m. I think I wrote that wrong here. So 2 p.m. on Wednesday. Here, it was 1 p.m. Sorry. So like this. This was this big fair value gap. So this is with the volume imbalance. We take that and then this one. And then this is the consequent encroachment. And we can see it on the 1 minute over here. And then we have the bullish breaker being this one from 8th of April at 9 a.m. And then the midpoint of that is the main threshold. And we see how price comes here. And then price does this market structure shift. So here we have a swing high, comes above it, over here. Now we look for the first fair value gap that forms. It formed here at 3:30. This is also the time when we expect price to move the other direction, most of the time. And then here we have this fair value gap, and this is our entry in the fair value gap, or here it comes all the way down, touches this place, and then this is our target. So we can see that over here. Same picture that I shared before, sorry. So here I show you how it actually works. You can see. So this is, you create an order. So you want to put the order at the low of this candle, which is the high of the fair value gap. So we look on the top. That's 18,182.25. So look over here. So if we enter at, let's say, 18,182 and make a round figure, and our stop loss is here. First, you can see like how one value per point is 2 handles. So you can see here, 18,181. So this is $2 if it moves 1 point against you. And if it moves 1 point in your favor, it will also be $2. So if we enter here, our stop loss would be here, the low of this candle. So if we look on the top, 18,153. So we modify our stop loss here. So it'll be like $58 we are risking. And our target is over here. So 19,204. 19,204. Sorry, 18,204. That'll be $44. And let's say maybe the risk parameter is too high for us because we afford to lose maybe $50. So we could maybe enter the trade in the midpoint over here. So let's say we're entering at 175. So then we would risk, if we enter at the midpoint, then we would risk $48 to be able to make $54. So it's almost a one-to-one, but you get the point. So price can move 1/4. So 1/4 would be $0.5. So if it moves from 182.25 to 182.5, that's $0.5. And if it moves 1/100, that's 4/4, so that would be $2. So yeah, so this is how you calculate your risk parameters. Then if I go back, so after I write this, I put a picture of the setup that I took, and then I write how I felt during the trade. And here is very, very important that when you start, you can be very critical to yourself. And ICT talks a lot about this, that you have to be very positive and you have to put seeds of encouragement. You have to lift yourself up when you are doing trading, because when you start, you're very susceptible to all sorts of difficulties. And it's like you are a small child and you want to encourage yourself in your journal. This is very important. Imagine that you are a parent and you are encouraging yourself. Think about a child who starts walking. They will fall many times until they figure out how to walk, but their parents never talks bad to them. They always encourage them. So you have to do this in your trading as well. And when you see setbacks, like when you have done something wrong, and you will do something wrong, because when you start, trading is a part of it. I don't want to say 10%, but a part of it is technical and a bigger part is psychological, because you will be wrestling so many things. There are so many things that you don't know about yourself. Maybe you had a bad day at work, or maybe you feel frustrated, or maybe you feel very happy and very confident, not in the right way. And that will make you not follow rules. It will make you take unnecessary risk, and then you blow up. So it's very important that you understand who you are, and trading will show you that. And then once you understand the difficulties, then you are gentle to yourself and you always record everything as positive, because in the end it's just experience. And if you turn that experience into something positive, then you will learn from it next time. And you should not hide yourself from your weaknesses, and always remind yourself that there is risk into this and that you improve yourself. So that is very, very important, that you have a sugarcoating type of writing. So for example, here I wrote, happy to see my model pan out to script. There were some things I didn't like in the trade, but then I saw some signals, and that made me reinsure my confidence. Or if I would have done something bad, if I maybe like over trade or over leverage, then I would try to understand what was the reason behind it and try to correct that in the future. Also, very important to not share your journal too much. Like when you start doing this, the less influence other people have on you, the better, because you might start taking trades for the wrong reasons. Like if someone says something, oh, you're trading too little, you should take more risk, or this is nothing, like, you should not listen to that. You should not invite any sort of like negativity into your trading, or any sort of like someone pushing you to do too much, because that will make it easier for you to follow the plan. So yeah, so this is how we do this. And then here I wrote a little bit, like it would be 22 handles that I'm aiming for, or that I have achieved. And there was 10 handles of heat that I went against me. And then I would give myself a scorecard. It could be like from A till D, we usually do in Europe. And then how many contracts I have traded, the instrument, how much money I have made. And when you trade, there's actually something called commission costs. So I trade with AMP. So that's like $1.24 per contract. So yeah, subtract that from the money you made, then you made this much, and then you would have to pay tax depending on where you live and so on, probably at the end of the year. So yeah, so this would be like a trade setup. Here I just wrote some other examples. For example, yeah, this is just some samples, like if I would lose and so on, and I will use that usually Like I make my log every day, and I would use it for this. This is like some KPIs that I have thought are relevant for me. You can find your own, but I make some calculations. So I use this and I connect it with the previous tab, and then I see my results. Because every successful business, they usually have a data analysis department that does their dashboards. So they have to follow on their key metrics. Then they know if the business is going into a good direction or in a bad direction, and then they can adjust accordingly. And I think it's the same. You are doing trading, so you are doing your own small business of trading. So you also want to follow your KPIs. So using this demo sample, then I have like this win profitability, which basically means like if it's more than 100%, means that you've made more than you lost. And if it's below 100%, means that your losses overweight your profit. So what I usually do is like I look on all the trades and I see how many of them are winners and how many of them are losers, and I get a percentage. So here is like 2 times I make more money than I lose, and we can see that over here. So I make like 42 plus 18 minus 31. So yeah, generally profitable using this sample of 3 trades. And my win rate, so there were like 3 trades, so it's like 66% profitability and 33% loss. Average win, so this will be average if I win, how much is my win? So it'll be like $30, and I use just one contract, or the average loss can be this much, and this is the number of contracts. And one thing that I found out myself when I was looking through my weaknesses is that generally when I have losses, the losses happen at the bigger number of contracts. Is because in that day maybe I have overtraded or I have done something wrong and I try to correct it and then I do too much. And this is a general fact that it happens a lot. Like if you read Tom Hogarth book, which is called Best Loser Wins, this is a great book. And one of the points that struck me there is that in general, people are right about the direction more than 50% of the time. I think it was around 70% of the time they're right. But then they lose money. 85% of people who do trading, they lose money. Why? Because their wins are small. So when they win, they are scared and they close their trade. They don't let their runners run. And when they lose, they do what is called like hope and pray model. They just hope is going to turn in their favor. And they let their losers become really big. So we are scared when we win, and we are hopeful when we lose. So that even if we are right more times than not, because of that psychology that everyone has, and we have to fight against it, we have to overcome it if we want to be consistently profitable traders. That's why 85% of people lose. So you will discover your own character flaws and your way to correct it, and you do that by logging. Then you accumulate data, and especially this part, how you felt into the trade, and try to be organized with the setups, and then you will understand the days when things don't go as planned, what happened there, and then be gentle to yourself to learn something from it, because this is like, and this is why I say start with the small account, start with the 2K account, because depending on which part of the world you are, that maybe it's not affordable for you, and then you have to like make more money to be able to start an account. But if you're in Europe, a 2K account is a reasonable account to start. So even if you lose some of it, then it will not damage you. So don't put like 10K account or too much, because in the beginning you want to spend time and to understand who you are and what makes you tick in the wrong direction, and spend time there and learn from it and try to improve it, because that will, if you manage to overcome that, then you will become consistently profitable. And then what I do, like I showed another template here. So I have this template. This is like a summary of how things have been going. And then I have this, for each week, I make like a master template. So it will look something like this. And here I usually add more information that I don't add here. I'll add some screenshots to the charts, and then I write more about it. So what I do is like, here I have on the first slide, like before the week starts, so before Monday, I look at the seasonal tendency. So this is the 15 and 30-year average, and I look at it on a monthly basis. So feel like from October to November, I will just drag this up. Maybe you've seen it in my videos before, and I will see, okay, this is generally going down. And then I compare that to my chart. So this is not 100% absolute, but it gives me a statistical edge. So if the technicals, the PD arrays on the higher time frame are looking similar to the ones are also pointing to the same direction, then I'm more confident that this week is going to be a bearish week. So that I will be more biased towards taking short trades than long trades. So this is how I use this. And then I use the calendar. So I use forexcalendar.com. So here, for example, this was the current week. So if we go next week, I usually have it toggle off to like the US dollars, orange and red folded news, and I have the New York time as well set up. So then I can see the exact time when the New York news are coming. So then I decide, okay, next week we have, so Monday is an off day, then like Wednesday we have this news. Thursday we have this news, and probably my best setups are going to be, so probably I'm not going to trade on Tuesday because it's the day after holiday, so it's probably more slow to move and more high resistance. But after 10 a.m. on Wednesday, then I think there is more probability to find good setups, and the same for Thursday. And I really trade the PM sessions, so I would look for those PM sessions during my macro times for trade setups. So yeah, so then I just write that these are the days, and then I do some analysis on the higher time frame. So like on the weekly or daily, I would put my levels, and I will just generally prepare my charts for the week to come. Every week I make like a new template. So what I usually do is I have this new day opening gap, opening range gaps, and then I have higher time frames and the one with the first fair value gaps. Maybe I will make another video to show my trading setups. But you will make your own depending on whatever trading strategy you decide to use. So yeah, so I will write that up, and I have this personal goal for the week. I will explain it afterwards. Then I have these like nice emojis where it shows the setups. So like I usually use PM session and last hour, and I like to use this one to show like the macros, so 20 minutes. And then some other emojis to just spice up a little bit my general. And then some days I will write like a description about how the day has been, what was the highest high and the lowest low, and just fill it up with analysis. And then I will do something like for each day, maybe I will show the trades that I have taken, like in this case, and then just connect that to my logs. Yeah, so this is how I do this. And then I had this, where was it? Here. So I do the same for every day. And then at the end of the week, I do some reflection. So I have looked, and I have borrowed that from YouTube, from a trader called Jade Cap, which is one of the best ICT students out there, and he has a nice video how to optimize your trading journal. So I use that for inspiration for this slide. So he said, like, ensure that I have journaled all the trades for the week. So this is your back testing. The more you do, the better, because you will train your eyes to see new setups. And then say like what worked well this week, what didn't. And this is my favorite, how to get 1% better. Because I think if every week you learn something, then you can improve it to the next week. And then you become better. And that 1% compounds. Same like it compounds over here. It doubles your value. Then same that 1%. Or yeah, if you do it, you'll become better. So then you could also like look, was there a time when things didn't go well? Are you entering too soon because you're impatient, or are you too late because you're scared? Do you take profits too early? Do you take profits too late? Is your stop loss too tight? And all these sort of questions that will help you understand yourself better. And then You might start notes. So I have noticed this in myself. So for example, one of my weak points is that after I perform good, then I tend to become negligent of my trading and of my risk management, and then I tend to lose most. So when I'm most happy, when I make my wins, that's when I usually have my downfall as well. So you will discover for yourself what is a recurring problem in your trading, and then you just have to work on it and to correct it. So you have to figure yourself a solutions and how you can take actions every day to improve it. And if there is something that works really well, for example, for me, I figure out that if I have two targets on my trades, so if I trade two micro contracts, or even if I trade one micro contract, if there is two objectives, so if I go back here, maybe one objective would be here and one objective would be here. So let's say this is my final objective. It's better for me to take the first objective. I usually call that the cherry. So it's like I have this is like a cherry, like a low hanging fruit objective, and then it's my actual objective. So what I've noticed is that I take this objective first, so this will be like my cherry over here, and this one will be the actual bullseye. I will shift that here. Then I usually perform better if I just go for this. It makes my day more relaxed. I don't have to give too much time to trading. So yeah, it makes things better. And then something else that you can do is like study what was the biggest move of the week. And then you identify how could you have catch it. You look for like signals. And then you train your eye. And in the future, if something similar happens, then you already have this experience to lean on. And then again, so for the previous week, the next week, I'm going to add my goal. So yeah, so I think this is what I wanted to share, and just just let me know what you think about this, and if there's any things that you wrestle with, it's better to keep that for yourself. But the advice that I want to do is to, yeah, don't just put it in your journal, maybe. Um, have it in your journal or talk with people who lift you up. So don't share with everyone because it will slow your progress if you share it too much, but you want to share it a lot in your journal because that's where you actually build yourself. And do things slowly. So, because if you do it slowly, you will get there better. So, slow is fast because you move smoothly. And I'm going to share a personal example of like how it went for my trading. So I had this, yeah, I started the year here, and this is how much I was making per week. So I started with like a $2,000, and then I lost the first week. So on week 5 when I started, then I lost again. And then on the week 7, I was starting to make some profit. So I make 6% profit, I make 3% profit, 9%, 13%, 12%. And you see, like here, this was my weakness. Like I was making money, and then here in this week, I did something dummy. Like I was very relaxed that I've been making money, and I started pushing it, and then I lost 10%. Then the next week, I was like on holiday, and I was didn't prepare my charts well, and I was just like, let's just f around and see what happens. And I was not prepared. I started over trading. I got into all sorts of like trying to make it back, and then I just blow it here. And I brought myself back to square one. And then now I'm making it back, following my models and everything. So I'm on week 17. So if I compare, instead of like taking so much risks, if I would have just be happy with 1% per week and not and follow my plan, follow my risk management, then on week 17, I would have been pretty much in the same place. It's just a $11 difference. And you do it very calmly instead of taking too much risk and yeah, not following your plan. And you have to make your plan simple. So, for example, this is my plan, like in one page, I set it up. So I look for the market environment that we're in, trying to identify if we are in a low resistance or high resistance liquidity run. And I identify that by looking at the fair value gaps. Are they being respected? If yes, then I can trade 0.5% of my account size, depending on what the account size is. If not, then I either decide to stop or I risk 0.25% on a trade. And if you lose once, you have to go away from the chart. You can return in the next macro with half the risk. So if I do 0.5, I do 0.25. And if you lose again, then you don't need to fix it. You just go home with it, you taste it, and you can take 5 losing trades and have no effect on you. Or like we showed in this example, you can take 200 losing trades and it shouldn't have an impact on you. But instead, if you overtrade, you do too much, then you tend to blow up. And this was the day when I traded maybe 100 contracts or something, trying to make a bet up after doing some progress. So you want to avoid that. It will happen, maybe for most of you. It happens to traders, but you need to identify it and you need to identify what causes it and you need to rectify it. And you do that by going to the risk management and following that. And every week, just you have to do the same thing. So once you learn your model, yeah, just follow the plan and you will get there. So hope you enjoyed this one, and till the next one, be safe.